The future of consumption could be female. As a market, women represent an opportunity bigger than the economies of China and India combined, controlling an estimated $20 trillion in consumer spending globally and holding a good share of private wealth.
Women are holding a third of the world's wealth, almost 93 trillion. So how do we mobilize that?
Part of the answer lies in supporting businesses run by women. But women still struggle to receive funding, getting just between 2 to 3% of global venture capital last year. Tanya Rolfe, who co-founded financial education platform Sophia to raise awareness of the issue, says that's partly due to the traditionally male-dominated industry.
So 76% of VC fund managers or VC funds in Southeast Asia do not have any women partners, meaning there's no female decision-making in that fund. As a female, I might display my confidence and abilities in very different ways. And so those male VCs may not pick up on that. And that's understandable. We invest in people we can relate to and people who look a little bit like us.
Gender lens investing could help reduce that imbalance. It gets investors to consider gender-based factors when deciding where to put their money. This includes considering if a business is run by a woman, if it supports women in the workplace, and if it caters to goods or services used by women.
And why do you actually do that? It's because you realize the potential of women as consumers, as entrepreneurs, and as employees. And therefore, you're really looking at, sort of covering much more, or, diluting your investment risk. And you're improving your assessment, you're improving your management pool.
Worldwide, there is increasing demand for gender lens investing. But data on their performance shows a mixed picture. One study showed that gender funds lagged their respective benchmarks by 2.4 percentage points in 2020. But another study by Boston Consulting Group found that businesses led by women deliver more than twice as much per dollar invested than those founded by men. And the ripple effects are far-reaching. McKinsey estimates that supporting women's equality in the workplace in the Asia-Pacific could add $4.5 trillion to the region's collective GDP by 2025. That's a 12% increase over the business as usual trajectory.
Gender lens investing is a way of investing, a lens essentially of saying we will invest into women because there is such a gap. And it's not that there's, oh goodness, well, poor women are not getting any funding. It's more, actually, women are performing really well when they do get the funding.
Globally, there is an increasing amount of capital available for gender lens funds, with about $7.7 billion invested across public and private markets worldwide. While GLI is a relatively new concept in Asia, it is gaining traction.
Many of our family offices do have next-gen leaders that are tasked with looking at investing sustainability and with purpose. And many of them are women. So they wear a different set of lens from the men when it comes to direct investing and investing in purposeful vehicles.
But such strategies are still relatively niche among the traditional investor pool. A major issue, a lack of benchmark standards and data on returns, which may deter potential investors.
So while there is a strong case for business investment, I think there needs to be much more data collection and data disaggregation to drive a sustained commitment to investing in women. I think some investors are cautious about being identified as gender lens investors because they feel that that will pigeonhole them into being gender advocates and make it sort of narrowing their opportunity as both and their scope as investors?
Analysts say it could take decades for gender-led investment strategies to become more mainstream.
I think it takes about 2 generations. I like to think that the attention is getting now. It's great, right? It's making people say, okay, we need to look at more variables than rate and return and risk. Yeah. In fact, if you don't plan long-term, it's also a risk element. So I would say hopefully down another 10 years, best estimate, people wouldn't have to say that, oh, this is a gender lens investing. Yeah. It would be, it's right and purposeful investing.